Hi guys, and welcome to a special Easter Saturday market update. It's not very nice down on the beach today, so I thought we'd do our Saturday market update here at home. So let's get into it. All right, so the markets were closed for Good Friday, but we still did have the Labor Department release the latest jobs report for the month of March for the US. And this is going to likely have a really strong impact on markets early next week. Now, I'm going to read you some figures here because they were really standout numbers. We had 916,000 jobs created in the month of March in the US. That was actually far better than expected, 675,000. Now, what was really interesting was the Labor Department actually upgraded the jobs number for January and February by 156,000. So the official unemployment rate in the United States now is sitting around 6%. Now, bond yields did rise slightly, just to a little over 1.7%. And as I'll talk about in a moment, we want to keep our eye on those over the course of the next few weeks and months ahead. But right now, 7.9 million Americans are still yet to win their jobs back to get us back to the level we were in February 2020. So if we can get back to that level, that means the US are going to again be fully employed. But at this stage anyway, still quite a bit of work to do. But I can tell you, over the last 15 to 20 years that I've been trading and investing, around 150 to 200,000 jobs per month is an exceptional number. 916 is just an absolute blowout. Now I'm going to read you some numbers of what industries those jobs came in. Leisure and hospitality, 280,000, 176,000 for bars and restaurants, 110,000 for construction, 48,000 for transport. So we're seeing jobs be won back in industry sectors that we've been seeing thriving and that we've been investing in, which is great news for the balance of 2021. Now, interesting enough, business activity in the United States, this is one of the reasons why never, ever, ever bet against the United States. It has an incredibly resilient economy. 93.5% business activity is back to compared to the 100% of February 2020. So it's only within 6.5% of where it needs to be. Now, manufacturing is booming in the US right now, and that is a really strong sign for the markets going forward with respect to growth. And we need to keep our eye on growth, and we also need to keep the other eye on inflation, because we don't want to see inflation getting ahead of growth. We want to see growth continuing to rise and inflation just steadily starting to tick up. If inflation and growth rise together, that's okay. But if inflation gets ahead of growth, then I think financial markets might have a challenge going forward. So we want to make sure for the rest of 2021, at least in the medium to longer term, we keep an eye on that growth in inflation numbers, and we'll get those going forward every quarter. So I expect to see some pretty sizable gaps on financial markets on Monday because the US doesn't celebrate Easter Monday. Markets back open. Here in Australia, the ASX 200 will remain closed, but of course on Good Friday in the US, the New York Stock Exchange and the Nasdaq were closed. Bond markets and some FX markets were open for part of the day, but I suspect that given that sizable jobs number, much better than expected in the US on Friday, we're likely going to see some gaps on some companies and some markets, FX, etc., when things resume trading as per usual on Monday in the Northern Hemisphere. Now, yesterday I was sitting at home here. The weather's pretty average here in Noosa. Unfortunately, for those people that have come up to Noosa for a holiday over Easter, they're getting a bit of a rough treatment of it at the moment. But I was watching some videos yesterday of some of my favourite mentors, and I was reminded by Manish Paprai. In fact, back in around 2000, Manish Paprai actually sent Warren Buffett a letter actually applying for a job after very successfully investing his money for a number of years. And Buffett very quickly sent him back a letter and said, look, thanks for your interest, but I really like to act alone as an investor. And what I encourage you to be doing as an investor is to keep your circle of influence really small. Those people that actually get their circle of influence large in lots of different markets and are listening to lots of people, they're subscribing to lots of newsletters and lots of services, generally don't make meaningful returns. You're going to have a better result going forward as an investor, in my opinion, when you find the right people and you keep that circle of influence really small, and you don't continue to just get sucked into thinking, well, if I know more stuff, that's going to make me a better investor. And it's simply not going to be the case. So keep your circle of influence small, and that way it's going to help you remain focused on the key things for you as an investor, which really come down to: one, understand the businesses you own, make sure they're quality global growth businesses and you're buying at the right time. And you're keeping those things consistent so as your portfolio is not forever growing with 10, 20, 30, 40 investments in it. It's got the core number of businesses that you know and understand, that you have the loyalty to follow and build some conviction in with regard the money that you're putting into the market. And of course, knowing when to sell is understanding the financials, the fundamentals, and the CEO of the business. It's got nothing to do with price. Forget about thinking that you're going to sell a business if the price goes down. What you want to do is make sure you know when the right time is to sell, and that is knowing when financially or fundamentally there's something wrong with that business. And that is such a key, important part of successful investing. And the final thing I want to touch on in today's Saturday Market Update is playing your own game. Those of you that are investing in funds and investing with other people for a return on investment, basically what you're doing is you're playing their game. You're making them wealthy and you're always going to get average. But the reason why the vast majority of people don't play their own game like we do here at Trading Mastery and our clients, I mean, you only need to look at the previous post on our Facebook page, the happy birthday post regarding being 1 year old, to see how many of our clients are loving now playing their own game. Because once you learn how to play your own game, you can take advantage of dislocations in financial markets that allow you to invest in certain businesses and have some real conviction in those businesses and generate really significant returns. Let me give you some examples. Managed funds, as a general rule, cannot and don't take advantage of dislocations in financial markets. And when I say dislocations, I'm talking about when financial markets fall by 25, 30, 40%, and sometimes 50% about every 10 years. What is happening in managed funds is that money is going out the door at a very, very sharp rate, because people sell when markets go down. That's their human instinct. They sell when markets go down and they only want to buy when markets go up. So if you're a fund manager, you've got money disappearing during times of market turmoil when price goes down. And this is exactly the dislocation that private investors can take advantage of, because when markets are dislocated and when they're very cheap, we can buy up and buy quality businesses that are trading at a discount and buy them with some conviction. Whereas managed funds can't, and they don't. They're forever wanting to spread and diversify things around. You know, the average managed fund has 80 or 90 businesses in it right now. And this is the reason why the average investor, those of you who have got your money in managed funds and with financial planners, you do need to realize that you're never going to retire wealthy doing that. You've got to learn to play your own game, because you can then take advantage of those dislocations in financial markets. And what you can do is triple down on opportunities in great quality businesses, as we did in 2020. And that's the reason why so many of our clients, you know, made between 30 and 100% on many of the businesses they actually invested in. The problem that we have with managed funds and people putting their money in there is they're just simply making those organizations wealthy whilst they're leaving themselves wanting. And what is also happening with those managed funds is they're continually wanting to benchmark themselves against other funds. They're continually wanting to try and manage the money so as that they are either beating a benchmark they had the previous year or beating an industry fund or other funds in their industry. They're not worrying about what you're getting as a private investor. They're worrying about what they're benchmarking themselves against so as they get an inflow of money at the end of every year. So as a private investor, I don't care what my return on investment is at the end of every year. What I care about is what my return on investment is based at the end of my investment runway of time. That might be for some investors 5 years, it might be others 10, it might be others 15. But in the meantime, we don't have to report to anybody. We don't have to try and impress anybody to give us some money at the end of the year like a managed fund. We don't have to pay traders who are looking after the money, who are looking after their own self-interest. So you've got to play your own game, because when you play your own game, you can take advantage of markets in a really, really significant way when industry balance managed funds and other types of investments where you're pooling your money with others just cannot. So to maximize your returns, guys, make sure that you're playing your own game. Make sure you're educating yourself on the simple things. And those of you that have yet to join us here at Trading Mastery, get across to the website, tradingmastery.com.au. Just register to get one of the free offerings there, whether it's the mini course, whether it's one of the reports, or whether it's to come and join me in a live coaching event every second Monday evening. And let's get started to not only make 2021 a great financial year, because I can tell you now, we are seeing an economic boom right now and into the next 2 to 3 years that we may not see again for another 20 or 30 years. Let's face it, we haven't seen the economic boom we're likely going to see. I mean, it's setting records in the United States right now with manufacturing, jobs numbers, etc., and that is only going to spread out around the world. If you don't learn to take advantage of this, you're just missing another incredible opportunity. Have a great Easter. Look after yourself if you're on the roads, and I can't wait to get back into the markets with everyone on Monday.